Cryptocurrencies have swept the globe, particularly in the last 2 years. The total value of all cryptocurrencies exceeds $2.61 trillion. Bitcoin alone has over $1 trillion. Despite the fact that cryptocurrencies have shown to be a risky commodity, many stock investors have shifted their portfolios to cryptocurrencies. Furthermore, more and more people are becoming interested in this area rather than traditional financial possibilities. The rationale is self-evident. In a single year, cryptocurrency has provided unprecedented exponential profits. However, this does not imply that it is the greatest investment option right now. Welcome to Crypto Inquiry, where we are dedicated to providing you, the investor, and the crypto curious with factual information and topics. Our goal is to keep you informed to make educated and timely decisions and remove the fog of hidden information. Nothing is meant as financial advice, and always do your own research before investing. Here we are building a community to help each other stay informed and make the most of our financial gains. Staking and farming returns are better than dividends. Dividends on stocks range from 0.5% to 7%. Using a calculator, we can determine that a $5,000 investment that grows at 6% per year for 10 years may yield a maximum of $9,000. However, cryptocurrencies provide a variety of strategies to generate money with your existing portfolio, including staking, yield farming, and liquidity mining. You may earn anywhere from 10% to more than 1,000% every year, depending on the platform you utilize. Many may argue that the danger is higher with cryptocurrency. However, even with stablecoin, organizations such as Crypto.com provide a 10% return. You could make a minimum of $12,968.71 with $5,000 in the same 10 years without volatility. More than stock and without the danger of losing your original investment. Historical returns have been better on cryptocurrencies. The biggest historical return for the S&P 500 index was 34.11% in 1995. It has averaged 15.6% during the previous 5 years. If you put $1,000 in a long-term portfolio in 2016, you will most likely have $1,750 now. Bitcoin, on the other hand, has increased by 300% since May 2020. Previous halving instances in 2012 and 2016 resulted in price increases of 8,000% and 600% respectively. Since December 2020, Ethereum has increased by 130.8%, implying that investing in one coin alone might double your profits in a year. This year, several altcoins have surged by 50 to 1,000%. Although many stocks have seen exponential growth, it is easier to forecast if a crypto will experience exponential growth than a stock. Market capitalization can give you better opportunities. In his post comparing the benefits and drawbacks of stocks and cryptocurrencies, Jamie Bullock explained why the market valuation of cryptocurrencies might provide you with a better chance than stocks. He stated that the current entire crypto market valuation is a little less than $2 trillion. To put this figure in context, Apple's market capitalization is $2.3 trillion. That is only one firm. The entire market capitalization of the U.S. stock market is closer to $50 trillion. Gold has a market capitalization of $11 trillion. As a result, the whole crypto market is modest in comparison to other markets. This presents an opportunity for cryptocurrency growth. For a long time, many people have invested in the stock market. However, despite the fact that Bitcoin has been available for many years, investors have only lately been interested in it. As a result, you are still in the early stages of the game. You need less knowledge to invest in crypto than in stock. Another advantage of cryptocurrencies over stocks is the ability to invest while learning. However, you must have an extensive understanding before investing in the stock market, or you may lose all of your money. According to several statistics and polls, 70% of genuine crypto investors have been trading for less than a year. Furthermore, the majority of them would not consider themselves specialists. Despite placing money into multiple currencies, they just had a rudimentary understanding of how the crypto world works, yet they can make money. Another advantage of cryptocurrencies is that you just need 2 coins to build a profitable portfolio with a 50% return: Bitcoin and Ethereum. However, in order to have a 20% return portfolio in the stock market, you must have at least 10 stocks. Buying cryptocurrencies is much easier than stocks. Cryptocurrency platforms are simple to use, offer several options to purchase assets, and are available globally. You may also store your funds in external wallets and hardware for more security. Stock platforms are frequently only available in a few countries. Most of them only accept bank transfers to purchase stocks. And if you want to utilize it outside of this nation, your stock possibilities will be restricted. Furthermore, while some stock programs provide free commissions, the majority of those that operate outside of the United States charge incredibly expensive monthly costs. Meanwhile, the majority of cryptocurrency apps are free to use and have negligible purchasing prices. Furthermore, using P2P or peer-to-peer trading alternatives, purchasing and selling money to trade might be free. The good thing about investing is that you don't have to choose. Both investment alternatives have pros and cons, and while cryptocurrencies are the greatest investment right now, a robust stock portfolio may still be a smart long-term investment. Volatility. Because both cryptocurrency and stocks have the ability to fluctuate in value, investment in either is hazardous. In contrast, cryptocurrency has a reputation for abrupt and extreme price movements that can occur without warning. Stocks, on the other hand, are directly tied to companies that are obligated to explain how they've been doing and how they expect to perform in the future publicly and on a frequent basis. This knowledge may be useful to investors in reducing volatility risk. What does the research say? The National Bureau of Economic Research issued a report titled Risks and Returns of Cryptocurrency in 2018. The authors determined that cryptocurrency's risk-return dynamics differed from those of equities, currencies, and precious metals. Essentially, they discovered that changes in the value of an asset, such as stocks, did not correspond to changes in the value of cryptocurrencies and vice versa. This is a critical point for investors to consider when they plan their entire investment portfolio strategy. If the value of one asset moves in conjunction with the value of another, these two assets do not provide investors with protection in the case of a downturn. Instead, you'd want your assets not to be connected so that if one collapses, the other doesn't necessarily go with it. This remark implies that cryptocurrencies were not tied to stocks and other assets at the time, making them a tool to mitigate stock market losses or for the stock market to mitigate cryptocurrency losses. However, in the fast-paced world of cryptocurrencies, much has changed, including their association with the stock market. According to MoneyGeek's research on cryptocurrency and stock returns, the link between equities and cryptocurrency has been growing since 2020. If cryptocurrencies have a higher correlation to equities, they will be considered as an investment and speculative assets rather than traditional currencies like the US dollar or even traditional stores of value like gold. This change affects how individuals perceive and use cryptocurrencies in their daily lives and financial portfolios. However, how the link between cryptocurrencies and equities will grow over time remains unknown. What do experts have to say on the matter? You might consider investing in both, depending on your risk tolerance. Adding cryptocurrency to your stock portfolio can be a fantastic way to add some beneficial diversity while also opening the door to potentially lucrative returns, all while being fully exposed to the hazards of either investment. Consider the following before investing any money. What is the most you can afford to lose? A well-diversified stock portfolio may provide a more solid home for your money than crypto investments. How much do you hope to earn? Stocks can provide more consistent profits, while cryptocurrency might possibly provide bigger increases. What is your timeline? Cryptocurrency price swings can let you gain money far faster than the stock market's lengthy time horizons, but they can also lead to short-term losses. You might put aside a small amount of your portfolio for speculative capital, which is invested in high-risk, high-reward investments like Bitcoin. It is entirely up to you what percentage of your assets are speculative, although experts advise keeping it under 5%. Only invest in assets that you will not need in the near future. The benefit of diversifying your portfolio with cryptocurrencies is that if the value of cryptocurrency skyrockets, the 5% you put into it will see great returns, perhaps doubling the value of your whole portfolio. You may then sell some of your risky investments and reinvest the proceeds in less volatile assets, never investing more than 5% of your portfolio in hazardous investments. That's a wrap for this video. Check out the videos on the screen if you are interested. Let us know in the comments below if you think crypto is better than stocks for investment. If you enjoyed this video, give this a big thumbs up, and do not forget to subscribe to our channel if you want to see more videos like these. See you next time.